What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Lee Johnson. How you doing today, Lee?
I'm well, yourself?
Oh, I can't complain. As a matter of fact, I'm in a great mood for one reason in particular, which is my very favorite audience member is here today. And why is my favorite audience member here today? Well, it's because it's a chance encounter where I interview commercial real estate investors, syndicators, and operators. And why do I do that? Well, part of it is for compliance. You need to know the people in your industry. You have to find out what they're up to find out if there's any overlap, and because otherwise you're just pitching people, dealing with people all willy-nilly, and that's not okay. So before we get too excited about things though, Lee, do you want to introduce yourself to the audience real quick?
Yeah, my name is Lee Johnson. I live here in Northern Virginia with my wife and two kids. Started up a small private equity real estate company about 4 or 5 years ago, which we named as Value Investment Partners. And since that time, we've invested in 25 deals, 20 as LPs, 5 as GPs, and now we're starting to turn our wealth wheel, is what we're going to call it, and moving into privatized banking, basically is insurance products and things of that sort, but also helping others to figure out how to start their business where they're using their business credit profile versus their personal profile as they grow their businesses. So we kind of sort of built out a portfolio of things that we've used ourselves and we believe will be beneficial to others.
All right, that's beautiful. And I have one thing to request right off the bat is, but wait, check your 8. So, but like that for the audience, it's your 5 down here. Can you see in the audience's screen? Can you see if down there they've got the red subscribe button or the gray subscribe? Because they really should subscribe. I think. I don't know what you think. Anyway, let's jokes aside. Let's Let's go to the 5 distinct motivations, the first section of this show, which is I've figured out that commercial investors, syndicators, and operators, they're making their next acquisition for really one of 5 distinct reasons. And I go through each of them. Most people, it's a combination of several, but some of them will appeal more than others. So the first reason I found, some people are making their next acquisition because they want to preserve their purchasing power. Now, people who already have that financial nest egg, aka assets that cash flow, so that they can basically live off of the money that comes in from the things they own. The reason why they're going to make a new acquisition is because the inflation is eating away at the value of their cash flow, or they're thinking, across asset, what it all works out to. So, but that's not what I'm up to. My big one is I'm trading time directly for wealth, aka deployed equity. Now, what that's all about is, of course, I've got a background in technology, and people in technology, they tend to have a higher amount of income tax because of the higher amount that they have in income. And so it hit me as like, well, what can I do to pivot and make sure that I'm skipping that step? I'm basically getting that deployed equity instead of just making a high salary and having an intermediate step. But some people, they want to take control of their time, and you could say it's fast tracking their retirement. It all depends. Some people, it means they want to work fewer months per year or fewer weeks per month, something like that. And they want to basically take it easier. Whereas the last 2 groups, like the next one, they're so ambitious. They want to buy their entire hometown. They're in that for the generational wealth. These guys aren't looking to tone back. They're going to be hustling into their 90s, and that makes them a great team member. So they're going to be hustling into their 90s. And the last group, they will as well, because they picked a sector of society, or maybe it's animals, or maybe it's the environment. Maybe they want to send people to Mars or something, but they they've realized they want to make a big impact, and they realize that financially you got to have a lot going on for that to really happen. So that's why they're making these acquisitions. So Lee, out of those five different motivations, what really stood out to you and describes you best?
All of them.
All of them. It's just as easy as that, right? So,
All
so
of them. I have a job that pays me a considerable amount of money.
mhm,
And I started to realize that even though I made more money, right? There's only so many deductions that I would have as a W-2 employee, and that was going to tap out with my 401k. I have an HSA, but you tap out out of a certain point. This is why when I see athletes who are making, these max contracts of $200 million, the only people who are just as happy as the athlete is the IRS, right? And the IRS is going to take a third of that. So if you make $200,000 and the IRS is going to just off the top take about 60 million of it, that's going to hurt. So, I went to school, I went to college, I got my master's degree, my MBA, I got my bachelor's degree in computer science, and I went out there and I worked and I rose up the ladder. I made more income than I ever thought was possible. But then I started to realize that if I make any more money, Uncle Sam is just going to take more of that. And that's when the flip in my mind started that, hey, I don't need to go and make any more W-2 income. And I think that that was after I read Cash Flow Quadrant and I started to realize, oh, there are different streams and types of income, right? I didn't know that before. So then when I realized that passive income is taxed the least, right? Then I said, well, I need to make more income from this bucket versus the other bucket, right? But I always, I always say to people, I didn't have a silver spoon in my mouth. I had a plastic spoon, and that was a plastic spoon that I stole from McDonald's, right? That's the only spoon that I had in my mouth. And I could use that spoon to basically grow myself to where the wealth I am today, right? I think that this is something that's teachable to anyone, and most people need to be transformed. They bought into the fact that they can work 30 to 40 years until they get to retirement. But with the model that we've been using, right, we're on the 7 to 10 plan, right?
mhm.
So we'll be out doing what it is that we want to do. So yes, I'm going to be that old guy who is basically trying to do a deal until the day they roll me into the ground. Like one day before, I want to be signing a deal, right, on the GP side saying, I made some money, and then they can put me into the dirt. That's where I'm looking to go with it. But yeah, people have to be educated. They have to know all about these different things. And it's a pleasure for me when, I can take something that I've learned about in the book and I read it, and then I'm able to put that into a story and then share that story with someone else. If it resonates with them, then they can come along for the journey. Because I always tell people, at the end of the day, I don't want to be on my yacht alone. I want to party on my yacht with friends and family and have a good time. What's the sense in, doing all of this, dealing with the stress, if you can't have a good time with it at the same time? So I want to be surrounded by friends and people who I like, right? When I make it to that spot.
Mhm,
So
mhm.
that's why I say all five.
Yeah, yeah, I think that's a very fair answer. I really love that. And that brings me, though, to my weirdest question of all of this show, which is the tolerance for risk assessment. The question is please fill in this blank. There are many popular investment asset classes, so real estate or out of real estate, but I think blank is too risky. What's too risky for you, Lee?
Cryptocurrencies.
And what about it really jumps out?
Well, the thing is, anytime the government, and this has already been done by several, have said that anything related to your asset class can be wiped out with the stroke of a pen, I've decided to say, well, that's not going to be somewhere where I'm investing. So China has basically said that, you know what, you can't do any crypto mining in China, much less we're going to lock people up who are transacting in cryptocurrency. So that's a good reason not to be in it, as well as India, I believe, has also done the same, or they were talking about doing much of the same. the last part is, people will say, well, everything that we have is a fiat economy, right? So, the dollar, the United States dollar is backed by just the trust of the United States that we have always paid back our debt,
Mhm.
right? Yeah, that is true. But the definition of a currency is that it is a stable asset. So the US dollar is a stable asset and it holds value.
Mhm.
So whereas cryptocurrency, yeah, 1 minute it can be $68,000, and then a couple months later it's at 20,000, and no one could actually tell you, well, why did it go up or why did it go down? That's why I believe that cryptocurrencies are too risky for my investment profile. It works for others, and those who have made a killing on it, to them, hats off to them. But for me, it just doesn't work.
Yep, yep, I love it. I love it. And that brings us to commercial real estate. And in every single episode of Dan Does Deals Chance Encounters, I go through the dandoesdeals.com commercial roll die with the 6 different rolls in every single commercial deal, especially multifamily. And then if you want your own copy of it, I don't even ask for your email address. And from a marketing perspective, that's pretty much the dumbest thing you can do is give stuff away without asking for an email address. So you can go ahead and check that out because I want you to be able to print this out. And most importantly, I want you to be able to effectively, it's easy for me to say, effectively communicate on the subject of commercial real estate. So let's
Hold
go through
on.
these. Yep,
Are you
what's up?
telling me that you're not going to mail me this? I have to.
I'll make an exception for you, my friend, for sure. But let's go through these. This is not for Lee's benefit. This is just to make sure you got them all locked. The big one, the first one, is the repositioner who looks at a bunch of different properties. They are acquisitions people. They are deal finders. What are they doing with all the paperwork? Well, there's a fancy word for it. First thing is they're underwriting the deal. That means they're doing the arithmetic. They're figuring out, is this business even making as much money as the broker and the seller claim it actually is? Because it might not be. And then they're thinking, not everybody calls this person a repositioner. I call them a repositioner because they're thinking, how can I change the property to find more upside? And there are 3 main tools in the tool belt of the repositioner to make that happen. The easiest one is to find more advantageous lending from your financiers, but that's more to do with reputation, so let's pretend that's off the table. So the first place they're going to look is more efficient operations, and it's more than just making sure that those Benjamins don't go down the toilet and clog them, because then you have to unclog them. There's also collecting rents, there's mowing lawns, taking out trash, but there's also a marketing component, and that's one of my fortes that I bring to the table, and then that way the main role that is for making sure that the vacancy rate stays low. But operations, chances are it's too slim to find a whole lot of wiggle room for the repositioner there. So often they have to get a contractor team in there to do a value add. Some people would call it a renovation, but basically if you make the units nicer, we're talking about multifamily right at the moment, if you make the units nicer, then the next tenant will be happy to pay more in theory, as long as the repositioner knows a good area. Speaking of which, one problem that a repositioner might have that I totally have, see, I'm from the internet, so I always need a local involved, somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at the airport. But if you got this whole team and you turn around to the financier and say, hey, I got this property, it's worth tens of millions of dollars, you don't happen to have, say, tens of millions of dollars that you want to lend me, right? And the financier looking at this team and looking at the property is still going to have one question in their mind, and it's a big one, which is, who's your KP? Who's your sponsor? And what's that's all about is that if you want to buy like a 350 unit apartment complex, the only way that you're going to be eligible for the loan is if somebody in the deal already owns a similar asset, or else they're just going to say no. But on top of that, you need a certain amount of liquidity, and then you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So Lee, as far as your core competencies or what you tend to bring to your next deal, which roles do you take up?
I take up financier, capital,
Mm-hmm.
uh, underwriting, or your repositioner. We,
Mm-hmm.
we take up many sides to that cube.
All right, beautiful, beautiful. And so the next question then is the ideal property. So when investors such as ourselves are looking for an ideal property, or we say this is our buy box, this is what we're talking about. It's mostly 3 things. First one's geography. Where is it? Which states? Which counties? Possibly even which neighborhoods? Okay, that's always going to be important. Second one's the size. So that's usually in multifamily, it's unit count. There are some types of commercial real estate where it's in square footage, but unit count is going to tell you how big a deal is optimum for you. And then the third one is the one I hate because it's one word, has two meanings. Both of them are class. The first meaning of class, it has to do with the condition of the building. So is it old, or is it at least up to date? Is it have a bunch of luxuries and amenities, or is it really, really bare bones? That's one meaning of class. The second meaning of class has to do with the neighborhood that the property is in. So what's the crime rate like? How good are the schools? And both of those versions of class are rated the same way as in grade school. So it's like B plus or C minus or A and stuff like that. So Lee, as far as you and your team goes, what's easier to say yes to and more difficult to say no to?
We split the United States into 4 quadrants, right? And we're including Texas in Southeast,
Okay.
right? Some people don't allow that to happen, right? So we're looking at, between 100 to 500 units, right? And also when it comes to class, we're looking at B minus to C plus, right? We like deals that have a value add opportunity to them, but we're not looking at core and core plus at this point in time. So it has to be probably a 25-year-old product or older, where there's an opportunity to do a renovation because we're former flippers, to add that value to those properties and increase those market rents. So I think I hit the three that you were talking to.
Yeah, for sure. So then my next question then, and I don't know if this is your favorite part about commercial real estate as well as me, but my favorite reason for getting into this business is that because it's a team and everybody has their own swim lanes, it means that we're a lot more supportive of each other than a lot of other industries. But even though we're super duper supportive, we're all, because of our own skill sets, we're better suited to help some people than others. Me personally, I'm always on the lookout for more sponsor KPs. And the reason for that is because of my marketing and digital background, making all the online funnels and CRM management. And sponsors will have, like the KPs will have a foundation where I'm actually appropriate for what they need. Whereas when you first get started, you need grunts who are willing to work 80, 110 hours a week, all that kind of stuff to really make an impact. So Lee, who can you disproportionately help? Oh,
I
and don't
think
break any SEC rules about enticing investors if you have a 506.
no, disproportionately help,
Yeah.
right? So like you said, someone has to be local, right? And I live in a tier 1 area, which is the Washington, DC MSA. So buying assets here is between $250,000 to $325,000 a door. Partners who I could leverage would be partners who are in MSAs where things are attractive, right? Rents are still rising, right? Jobs are coming in. Texas is a very nice place. Tennessee is a very nice place, right? And if you are in those areas and you need a partner, hey, let's have a call to see how we might be able to combine minds and do business together.
All right, beautiful. And if they want to do that, like LinkedIn is a great way to find me. I've got a nice distinct name. I know that we met through Angel Williams'
I
meetup.
still can't pronounce your surname.
Yeah, it's Friedenberg. But yeah, if you saw the Gilbert Gottfried video, you'd be even more confused on how to do that. But as far as the best way to reach you, Lee, is it a website or is it through one of the social media channels? How should they reach out?
I'm pushing on LinkedIn and we're passive REI pros there. We still have a website, valueinvestmentpartners.com, because we're always looking to find value. But we still take phone calls, 571-444-8474. That works just the same.
All right, beautiful. And the only thing left then is not for you, Lee. It's actually for you in the audience, which is I need you to be careful when you do this. But like under the light up thing in the QR code, there might be, if you feel this pain in your eyeballs and it like burns, it's because you're looking at the red subscribe button, and the only way to get rid of that awful red subscribe button is you just click on it and then it turns gray. You gotta try this, okay? Because like if you have any Zoomers around and they walk by and they see your computer, this is big red button, they're gonna think you're So you definitely want to hit that, and it doesn't cost you anything. It just means my videos might show up in your list of suggestions. So please do that, but you don't have to even watch the other videos. I just appreciate the fact that you spent this time with me. Just like Lee, I appreciate you spent this time with me. It's been great getting to know you a little bit.
Same here, Dan.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.